Testing 1 2 3. Testing 3 2 1.
Thanks, William.
By the way, David, when the meeting's
Good morning, everyone. Welcome to the Finance Committee. Looks like we've got a quorum, so we'll go ahead and get started. There are no citizens, I believe, that are signed up to address the committee. Is that correct? We'll move on to item number 3, which is approval from the October 22nd meeting. Entertain a motion on that.
This is Dorothy. Move approval of the October the 22nd minutes.
We have a motion from Dorothy. We have a second from Sam. All in favor, please say aye.
Aye.
Opposed? Motion passes. Thank you, everyone. Item 4 is the FY20 year-end investment report. Is Greg Wardner on the call? There he is. Morning, Greg. Thank you for being here. The floor is yours. The floor is yours for item number 4A.
I don't see him.
Okay, thank you very much. And I believe, David, you were going to be able to put up the presentation that we have, so I'll give it just a second for that to pull up.
Here we
And
go.
I'll ask you to go to the first slide, and the next page there, which should hopefully be the executive summary of the portfolio on the very next page. And you know, I'll just get started here, summarizing the data by fund here. In total, the portfolio market value as of September 30 was just shy of $950 million. That's a pretty substantial increase from the prior period, or excuse me, from the prior year, which was $614 million or so. Now, the bulk of that increase is concentrated in the operating fund. The operating fund saw substantial growth to over $300 million during the year. Now, much of that increase is really related to federal funding, $133 million related to the CARES Act and advanced Medicare funding for COVID relief. So there's $95 million in uncompensated care funding. Some of those funds will be returned if they're not spent, but the operating fund now makes up more than 3/4 of the portfolio. And that's really important because traditionally operating funds, and the case is no different with the CARES Act funding, those have to remain very liquid. They're either going to be spent in a short time or they're going to be returned. And so there's a very short-term investment horizon for those funds, and that limits the maturities. And of course, in this environment, it makes the portfolio very susceptible to declining interest rates. And that's something we've certainly seen this year, something that's clearly evident in the bottom of this table. And I realize it's pretty small probably on your screen as it is on mine, but you can see that the yield to maturity of the portfolio a year ago was 2.34%. This year, as of September 30th, it's 0.64%. So we saw a substantial decrease, in interest rates over the course of the fiscal year. And I'll talk about some of the reasons for that here in a few moments. Nonetheless, the portfolio still earned $11,758,000 during the year. That's down from a little over $16 million a year ago, but it's still about $1 million more than the $10.8 million that was earned in 2018, although it did take a much larger balance to generate that same level of earnings this year. We'll go on to the next slide, please. We'll take a look at some of the portfolio characteristics. The pie chart at the top right of the next slide, you'll note that the allocation to CDs, certificates of deposit, stands at 47%. That's down just slightly from 51% a year ago, but that's still a very high allocation for CDs. It's much higher than we would typically carry. But the yield advantage in those CDs has really been tremendous for the last 18 months or so, and even though they require a bit more work from members of your staff and mine, the better yields are worth that effort. And I'll highlight one example. In June, we were able to renew a one-year certificate of deposit at 0.65%. And at that time, a one-year Treasury note, which would be a more typical investment for us, was yielding 0.15%. So the CD was earning 0.5%, 50 basis points more on an annual basis than earnings. And also to put that in perspective, to get that 65 that we got on the CD, you'd have to invest all the way out to a 10-year Treasury note to capture that same yield. Now, more recent purchases are being made at yields around 0.3%, but that's still well above Treasuries and agencies, which are around 0.12%. We have increased our allocation to commercial paper just a bit. We've taken it from 12% a year ago back up to 24%, and we've reduced our holdings in local government investment pools, shown here as LGIPs, as essentially those are money market funds with same-day liquidity they're one of the very lowest yielding investment options for us, currently around 12 basis points. Now, we've been trying to keep those balances down to a minimum while we seek, even slightly higher yielding options elsewhere. At the bottom half of this report, the pie chart on the left shows the allocation by issuer. And of course, the largest three allocations there are banks where your CDs are placed. So we have East West Bank, Southside Bank, and Independent Bank. And you can see there 24% with East West, 11% at Southside, 10% with Independent Bank. And then next up, we have TechStar and TexPool, which are the local government investment pools. Those provide the liquidity on the portfolio and fund your daily cash needs. And then once the RBC is Royal Bank of Canada, that's 5%. That's one of the commercial paper issuers that we use. And then 35%, the rest of the issuers, none making up more than 5% of the portfolio. So, we're staying very well diversified. That middle box there shows the distribution by maturity. You can see that we've got a concentration in that 6 to 12 month bucket. Two functions there. Number one, that's the short-term nature of your operating funds, and number two, that's where the CD rates have been a little bit more attractive. So we do have a concentration of investments in that bucket. And the weighted average maturity of the portfolio stands at 220 days, just about 7 months as of September 30. That's up from about 128 days a year ago as we've tried to extend the portfolio maturity a little bit here to capture some additional yield. And then, of course, the last pie chart there showing the credit quality very high. 50-odd% of the portfolio is collateralized with letters of credit or collateral pledged from the banks. And then, of course, with the concentration in government agencies and U.S. Treasuries, very high credit quality on the rest, and a little bit of commercial paper there at A1+. So obviously a very highly rated portfolio.
Greg,
next slide now.
Greg, before you move on credit quality, is that driven by statute on what we as a governmental entity can invest in? Is that what the...
By and large, yes. So the statute is very restrictive in terms of what you can do. The primary objective in your investment activity is safety of principal. And so you're required to be in very high quality instruments. So the bulk of the portfolio is in CDs, and those are collateralized. But the rest of the portfolio is primarily made up of agency securities and a little bit of commercial paper. It's that commercial paper that has the A1 or the A1+ ratings. And those are actually the highest ratings available in commercial paper. They're essentially equivalent to a AAA rating.
Thank you.
Sure. The next page, slide 3, this shows the portfolio compared to a series of benchmarks. These are U.S. Treasury benchmarks. The CMT stands for Constant Maturity Treasury. The purple or violet line is the hospital, the health district. And you can see that we're sort of in line with the 1-year CMT, and we're just slightly below that. But of course, a 1 year is a little bit longer than the maturity of your portfolio. But as you look at the 3-month or the 6-month or TexPool, all of those have collapsed to just above 0. And we'll talk about the rate environment here in just a moment. But you can see your portfolio is performing very well against those. While its yield has been declining and will continue to do so, it's been falling at a slower rate. And the portfolio's yield is being supported by the relatively higher yield available in those certificates of deposit. I'd like to move on now, if there's no questions on the investments activity itself, and I'll take a few minutes to talk about the economy and the rate environment that we're stuck in. This report here is going to be a little tough for you to see, but this is a relative value report that's basically a market snapshot that we look at every day. And this really captures the range of investments that you're able to invest in. And the top box there, agency discount notes. These are short-term government agency securities. You can see they're all less than 10 basis points, all less than 0.1%. Commercial paper there in the middle, we're not doing a whole lot of these days, but you can see they're all pretty much down in the teens. And then at the bottom, what we call agency bullets. These are non-callable securities that just mature at a point in time. And even out as far as 3 years, they're only yielding less than 30 basis points or 0.3%. So with the bulk of your investing kind of in that 6 to 12 month range, you're generally looking at yields between about 8 and 13 basis points, 0.08% to 0.13%. We can move on to the next slide now, please. You know, I don't want to go through all these events here. You can read through these at your leisure, but of course the biggest thing happening this year obviously is coronavirus and COVID-19, and it's had a dramatic impact on the economic environment. We of course had the elections just now, but those, you know, even the elections didn't have as big an impact as the coronavirus. So there's a lot going on, and I'm going to go through a handful of slides here to kind of tell you the story. And I'm going to go through these fairly quickly because I don't want to spend too much time. But if you have questions, please feel free to chime in and interrupt along the way. So if we could go to the next slide, please. This is the U.S. Treasury yield curve. The top gold line was from a year ago. The green line at the bottom is where we stand today. And the gold bars at the bottom represent the change. And, you know, in the short end of the yield curve out through about 3 years, you know, yields have fallen by 150 basis points in the last year. So just a dramatic decline in interest rates. Next slide, please. The next slide, this is the Fed funds target range. So the Federal Reserve sets the Fed funds target. This is an overnight lending rate that has a lot of influence on short-term investment yields. And you may recall a year ago when I spoke, you know, we talked about the Fed beginning to cut interest rates to try to counter some slowing that we were seeing in the economy. And obviously when the coronavirus hit, the Fed was forced to take drastic actions, and essentially they cut the overnight target to a range from 0 to 25 basis points. And the effective rate tends to trade right along the middle of that range. So, you know, the target, the upper band of the target is 25 basis points, but we're actually seeing Fed funds trade around 8 to 10 basis points today. Next slide. The next slide shows the yields on Treasury notes, so 2 years, 3 years, 5 years, and 10 years. You know, the 2 year is really the area that's most influential on the investments that we're looking at, but you can see that, you know, yields across the yield curve collapsed, you know, this year, and have essentially been bouncing along at rock bottom. As you look at the 5 year and the 10 year, you can see that there's been some gradual upward movement in yields here very recently. And that's, you know, an indication that we're starting to see some recovery in the economy. But the shorter end of the curve, the 2 year, is just not moving. Move to the next slide, please. So this next slide begins to look at some of the economic data. This is employment, so total non-farm payrolls. And you can see pre-pandemic total jobs in the U.S. stood a little over 152 million. We lost about 22 million jobs in March and April, bottoming at 130 million jobs, and we've recovered about 12 million of those. But we still remain about 10 million jobs shy of where we were before coronavirus set in. Next. The next slide is going to show, I believe this one is weekly jobless claims. So these are first-time filings for unemployment benefits. Pre-pandemic, it was around a little over 200,000 per week. We shot up to nearly 7 million in the weeks when the economy was first shut down. And we've gradually declined. But you can see even most recently, we're still running above 700,000 per week. So we're still 3 to almost 4 times higher than the levels that prevailed before the pandemic. And this is, of course, now, you know, what are we, 8 or 9 months into this? So, you know, even many, many, many months later, we're still seeing damage being done, and we're still seeing a lot of people affected by the coronavirus and by, you know, industries that have just absolutely been decimated by what's happened. And obviously, travel and tourism comes to mind. Clearly, I'm not up there making this presentation in front of all of you. And those who are traveling, I know some of you are sitting in some attractive spots, but my guess is you probably drove out there rather than getting on an airplane and flying. Go to the next slide, please. This slide shows continuing claims. So these are people who are continuing to receive unemployment benefits. Pre-pandemic, a little over 2 million Americans were receiving unemployment benefits. The blue line shows state unemployment benefits. The red line captures federal programs. Primarily, the CARES Act implemented a series that, number one, extended the duration of unemployment benefits from 26 weeks out an additional 13 weeks. But it also captured some people that otherwise would not be covered by state unemployment benefits. And these are what we call gig economy workers. Think about Uber drivers. So at the peak, 32 million Americans were receiving unemployment benefits. Now, those numbers have been declining but clearly we're still a long ways from a full recovery. And in the most recent data available, we still have over 21 million Americans receiving unemployment benefits of some variety. Move to the next slide, please. This is the unemployment rate. Again, the blue line is the official unemployment rate, 3.5% before the pandemic, 14.7% officially at its worst point, although the unofficial numbers were actually closer to 20%. And even today, we're still sitting at unemployment rates around 7%. The red line is known as the underemployment rate. This captures part-time workers who want full-time work and folks who have essentially given up the search because they don't believe there's a job available for them. And that stands at 12%, about 5 percentage points higher than it was pre-pandemic. Again, just reiterating this point, we've seen some recovery, but we're nowhere near being back to quote-unquote normal. Next slide, please. The next slide, I believe, looks at the ISM manufacturing and non-manufacturing index. So this is a survey of purchasing managers in the manufacturing sector and also in the service sector. And here you can see, what economists call the V-shape. So we see a big collapse in these indicators. Readings below 50 indicate contraction. That's that green line I've got here. So you can see in March and April we fell to some pretty abysmal levels, and we've seen a pretty remarkable turnaround here, particularly in the manufacturing environment, which has recovered strongly. Now, some of that, of course, is benefit from federal programs and federal spending, and we'll see that in some of these other slides as well. The question going forward, of course, is, are we going to maintain these high levels with the resurgence in the virus? Move on to the next slide, please. This is retail sales. So this shows consumer spending essentially on goods. Now, retail sales really doesn't capture services spending. Again, you can see this dramatic plummet when the economy was shut down and a big rebound. And on goods, we're actually running a little bit above trend, having pretty much recovered. Of course, we're being supported by government spending, unemployment benefits. You've all read about the $600 weekly unemployment supplement that was in place for much of the summer. Those kinds of things have certainly helped. But as we go on to the next slide, we're going to look at personal consumption expenditures, which actually captures both spending on both goods and services. This is an annualized number, but you can see we're still a little bit below the peak. So, we topped out at about 14.9 trillion on an annual basis, and we're sitting at around 14.6 trillion now. So, we're still roughly 300 billion shy on a consumer spending point versus where we were pre-pandemic. And move on to the next slide, please. Housing has seen a pretty dramatic recovery. That, of course, is supported by record low mortgage rates. The chart on the left there shows a dramatic decline in interest rates, and we've seen record lows on 15 and 30-year fixed-rate mortgages. And then, as people leave the cities and move out to the suburbs or look for additional bedrooms or office space for their home offices, we've seen a tremendous rebound in housing, and that's clearly shown here. And again, we also, we sort of missed the spring selling season with the economy being shut down, and we're capturing some rebound from that. Next slide, please. Inflation, don't want to spend any time here. The Fed is looking for inflation to average 2%, and you can see we're running well below that on all the major indicators. The blue is consumer price index. The red line is the consumer price index, the core rate, which excludes food and energy. And then the gray line is the Fed's preferred measure, the personal consumption expenditures index, all well below target. We don't expect inflation to be a problem for quite some time. Yes, was there a question?
No.
Move on to the next slide, please. Next slide, please. GDP, this is sort of the scorecard for the economy. You can see here, we went one slide too far, go back up one. But we saw a tremendous decline in GDP in the second quarter of 5%, and then it just fell off the scale at minus 31% in the second quarter. Now, we did see a big rebound. One thing to keep in mind here is these numbers are annualized, and so they sort of exaggerate the quarter-over-quarter changes. We really saw essentially a 9% decline in the second quarter and a 7% rebound in the third. Now we can move on. And the next slide looks at GDP as well, but it looks at actual dollars rather than percent changes. And again, reiterating this theme, we saw a big decline as things fell to their bottoms over the summer and then a sharp rebound. But yet again, we remain well short of the pre-pandemic levels. So we've got a ways to go yet in terms of the recovery, and it's likely going to take quite some time. Move on to the next slide. Just got a couple more slides to go here. These are equity indexes and interest rates. I think you all are probably familiar with what's going on with the stock markets. You know, they've rebounded and recovered very nicely. Obviously, technology has benefited in this environment as people are forced to use things like WebEx and Zoom for their meetings. You know, technology has been a big beneficiary in this environment. Interest rates down at the bottom table, you can see the dramatic decline from where we were a year ago. And of course, you know, at the short end, you know, out to 2 years, we're basically bouncing along very near record lows, and a little bit higher yields as you get out the curve a little further, but still remarkably low. And then move on to the next slide, please. And you know, I'll close with a couple of things here. So, you know, I normally do a little bit of an outlook or an economic forecast, and you know, when I was here a year ago, I closed my remarks by noting that the outlook essentially boiled down to what would happen with the trade war, the trade battle with China, which was the dominant factor at that time. And, you know, we saw some downside risk to the economy, and the Fed was beginning to trim interest rates, but obviously none of us could have imagined what actually happened or the scale of the impact. So as we look ahead into 2021, of course, the outlook is really dependent on what happens with the virus. You know, we've got a potential vaccine now. That's certainly good news. But there's a big question about whether or not we're going to be forced to shut down big swaths of the economy. You may have seen that yesterday New York announced that they were going to be closing their schools down. That has tremendous implications, and we're starting to see signs that may happen in other parts of the economy. And you all are probably more familiar with this chart than I am, but this is the daily trends in the number of COVID cases reported to the Centers for Disease Control. And I realize it's very hard to see, but you know, the first little bump on this chart is April, where we were bouncing around 40,000 cases per day. We spiked up to a little over 60,000 cases per day through the summer. And right now, we're averaging around 160,000 cases per day. So, you know, coronavirus is still with us and still causing problems. You know, the economy is going to continue to struggle until we can, you know, regain some semblance of normal. And we're not going to be able to do that until we see, you know, widespread distribution of an effective vaccine. You know, it's critically important. This is really the indicator for all of us to follow as we move forward. And, you know, I'll close by saying that the key for us is that interest rates are going to be low for a very long time. The Federal Reserve has announced that they're going to hold the target until inflation runs above 2% and until they see full employment. And we expect that we're still several years away from that even potentially happening. And that's assuming we see, you know, a strong rebound in the economy, which really is going to be reliant upon an effective vaccine to this COVID-19 situation. And I've probably babbled on for a little bit longer than I should have, so I'll close it there, and I'm happy to try to answer any questions if you have any.
Thank you, Greg. I always enjoy your presentation, even when the news is not always good. It's always interesting, and so I mean that sincerely. I look forward to your presentations. They're very insightful and get you thinking about where we're at economically and the future and all that. So thank you for that.
Thank you.
Any any questions for Greg on any of the items presented?
I have the same thoughts as you, Steve.
Interesting stuff, isn't it?
Oh, yeah.
Okay. No other questions. Ms. Clark, do we have to do an acceptance of this, or this is just a briefing?
No, this is just part of our annual briefing. If you guys recall, Greg prepares these reports quarterly, and we share them with you on the board portal. But once a year, he does have an opportunity to talk to the committee.
Great. Well, thank you again, Greg. We really appreciate you here and you here today and all that you're doing for us. So thank you very much.
All right. Well, thank you very much, and hopefully we'll see you in person again next year.
We're hoping for that. Thank you. All right, we'll move on to item 5, which is the CFO report. Ms. Clark.
Hi, I just have two things to report to you today. The first one is simply a reminder that our external auditor, BKD, is on site and moving through the audit. Our goal and what I expect is that we will have that final presentation for acceptance at the December 10th board meeting. I will give you a little heads up. I know you all love to read that audit report cover to cover. It may or may not be available when we mail out for the December 10th board meeting, but it will be posted by Monday at the latest. So you will have a chance to glance through. If you remember, Chris gives us a really high level kind of a highlights through the year. And so the actual report itself is supplementary.
And we normally get that in February, right? So we're getting it early this year.
When I started, we were presenting to the January Finance Committee, and then it would not get final ratification until the February full board. So we have stepped it up over the last few years, and the timing really works out nicely. We can get the year closed, and we can kick off budget in January as we start to look at volumes and things like that. So it's good to go ahead and get that report sealed up.
You're cracking the whip on Chris and his crew. Good.
Yeah, he's great to work with. Thank you.
Hey, Steve.
Yes, sir.
And this is, I probably should have asked Greg this question, but I'll ask Sharon because you'll know. When we add up all of the CARES Act and all the federal subsidies and all the dollars that we brought in that we're not completely sure how long we keep or what the reimbursement requirements are going to be, have we put any of that into the short-term investment portfolio with Greg?
It's part of that operating fund that he was talking about. So it is earning interest.
Okay.
It's close to $135 million. We got about $85 million from the CARES Act. We've got an additional $50 million in the Medicare advance funding. So as we talked about at the last Finance Committee, when we had closed the year, we are waiting on some final guidance to determine if we have to if we are allowed to recognize and keep some of that CARES Act money, or if it will have to be returned. So it's staying really liquid right now.
Okay, I just want to make sure it was in one of the accounts and that it was earning what little pennies of interest we get.
Yeah, and even though we didn't call it out specifically, all of the restrictions that we as a public entity are under for investments are kind of outlined in the Public Funds Investment Act. And Hilltop really helps us manage through and navigate some of that. We do have a very narrow margin for some creativity, like he was talking about the CD market. They help us identify some what seems to be huge earning multiples, but it might only be 0.5%. But that 0.5% really does add up for us over the year. So just keep that in mind as you look at our portfolio, as you look at the length of time that we're able to invest. A lot of that is defined from a legal standpoint.
Thank you, ma'am.
You bet. The last item, we will move into closed session just to give you an update on pricing transparency and how JPS is approaching that. DT, Wynn, had requested that to be, he asked for a little bit more information at the last meeting, so we're just going to go into closed and brief you as a committee on that. And that's it for my report.
Any questions for Sharon? No. Okay, thank you, Sharon. We'll move on to item 6, which is your the unaudited financial report from October.
So October, as a reminder, this is the first month of our new budget year. So we are in the ballpark. It's actually a favorable month financially for JPS, which is not always a surprise. We worked so hard to close fiscal years. We get a lot of expenses appropriately pushed back into September. So you'll see some of that gain in October. From a volume standpoint, we do have some trends that are happening. Overall, volumes continue to be down, although we do have some service lines that had peaks this month. Our admissions continue to be down by about 15%. However, our case mix index remains high this month, and it has also driven our length of stay up slightly, as you can see by the bottom two graphs. Our ED is about 19% under budget. You can see the red line is the budget and the dark blue line on the top left graph where we'll start to trend out fiscal year 21. And urgent care visits were low this month. When you look at the primary care and the specialty care visits, I do want to spend a second on this slide. As a reminder, we've tried to visually show you what are telehealth visits by the striped part of the bar on top versus the face-to-face visits, which is the solid or bottom part of those graphs. Primary care has about an even split between face-to-face as we start to reopen clinics and those telehealth. And then as you look at the specialty clinic visits, you can see that they are heavily weighted towards the face-to-face as the patient acuity is a little bit more difficult there. For observations, we're slightly ahead of budget for the month. I want to also note our surgeries at the bottom of the page. Inpatient surgeries remain about the same as last month and above budget. And outpatient surgeries are higher as well, almost to the fiscal year 20 levels, as you can see. A lot of that has to do with we actually budgeted for our Arlington Surgery Center to reopen in January, and that is open now. So we are ahead. We did open up the surgical schedules a bit, and you can see that in our volume. Our mental health statistics, you can see, are trending along just about where they had been. Our patient days are right on budget. Our clinic visits, again, you can see the striped part for telehealth. It's about half and half when you look at telehealth versus the face-to-face visits there. And our emergency visits are right on budget. So that went as planned.
Sharon, may I ask you a question, please?
Yes, sir.
What in the outside medical services for psychiatry, what does that consist of?
So the outside medical services, we added this graph about a year ago, and that is a big driver of some of our purchase service expense. And if you think about the flow of patients, they enter the PEC. Portion of those require inpatient admissions. When our psych beds are full, we have partners for those patients that are uninsured, where we can find them a safe inpatient bed. And there's 2 to 3 that we use heavily. So we began to show you the number of outside medical beds that we were utilizing. You can see that we've really begun to manage that very well. Zelia and her staff are extremely focused on both the length of stay for a patient in an outside medical facility or who actually gets placed.
Now that's what I thought it was, and that's good work by Zelia and her folks.
It is. It was a tremendous financial benefit and an operational effort as well. Our days on cash, days cash on hand, I've also added a little stripe there for you. We and that serves as a reminder to Trent's point earlier in our conversation about where the CARES Act monies being held, also the Medicare advance funding that could potentially be paid back very quickly or spent. You can see that there's a gap of about 50 days there. So that 135 million that we have, that we're talking about for the special payments, that is in the striped line and accounts for about 50 days. So with that, we're sitting on 277 days cash on hand available. And if you assume that as a liability to be paid back, we would be at about 227 days on hand. At the bottom left of the page, our net accounts receivable days, you can see that over a 3-year trend that has been very favorable. For October, we set at 41 days. And our FTEs compared to our budget at the bottom left, you can see last year we closed the year at about 6.03 FTEs per adjusted patient day. We budgeted 5.96, and we have landed at a favorable 5.92 for the month, which is also our year-to-date number.
Hey, Sharon.
Yes, sir.
How much has agency changed relative to your FTE number?
I can show you, I don't have that information in front of me, Trent, but I can get that to you shortly.
Okay.
But I can show you on the next couple of pages when we look at the dollars that we've spent on agency. Most of our contract spend and dollar-wise has been focused on agency nursing the last few months as we focus on staffing.
Okay, thanks.
You bet. Connection enrollment, it's increased slightly this month. We have seen an increase in applications and approvals, as you can see by this upward trend. And, you know, in January, we have a reset with some of the ACA plans signing up. And you can see a decrease in that connection supplemental. But you can also see the last few months, especially in the traditional connection, the gold part of that bar chart, that we have had an upward trend in the enrollment numbers. So for October, again, this looks a little different this month because year to date is just 1 month. We're 1 month into our fiscal year. The medical center itself had a favorable month. We ended the month about $2.2 million ahead of our operating plan. A large part of that is we had the higher CMI that really drives a lot of reimbursement for us, even though volumes were down overall by about 5%. We did pick that up in kind of a price favorability, and our inpatient commercial and our Medicaid volume was up slightly. Some of the other notable variances, Trent, if you look down the second line in the middle of the page under operating expenses, you can see that our contract labor is running about $170,000 this month higher than budget. Again, we have budgeted contract labor, but most of that overage is for kind of our COVID staffing and expansion. From a salary standpoint, we actually have a favorable month this month. We were about almost 3% under budget in salaries. We were down in volume, so we were able to flex the staff appropriately. And in the purchase service, we continue to see lower claims through our connection program. Those represent payments to physicians, and as those clinic closures are still ramping up, we have seen a budget savings there. I do continue to think about, is there going to be, when we do open these up, we may very well see a surge in those purchase service expenses. So we'll just have to watch that over the next few months. Moving on to a claim. At the top left, the build encounters, a claim was 3% ahead of where they had planned to be this month. So although there was some shifts between specialty and primary care, overall those build encounters were actually right on budget. You can see the telehealth impact in the striped part of the blue line. They have about 25% of their total visits in telehealth. And these encounters are both inpatient and outpatient combined. So there's a lot of tick marks that go in there to make up those build encounters, but they are ending up at about a quarter face-to-face. Our net operating expense per encounter at the bottom right-hand side of the page is actually favorable by about 7% for the month. So a claim had a favorable month as well. They came in about 1.4 million ahead of their budget plan. Again, volumes were right on target. We did have, as a mix, we had a favorable mix of patients with higher procedures, both in surgeries, in cardio and gastro specifically, as we open up the surgery schedule and those procedures that we're allowing to occur. And then their expense savings really came from decreased supply requirements with lower clinic volumes in that face-to-face category. And there were some delays that we had budgeted grants, so both revenues and expenses are a little bit lower as we implement those programs. Are there any questions? Again, we had a great month. We had budgeted about 7.1 million, and our income from operations is right at 11.
Yeah, one question, Sharon. Not on the claim. If you're done with the claim, I've got another question.
Yes, sir.
And we did this probably a year and a half ago. When we look at our key statistics, one of the statistics we used to look at in ED was our boarding. Give us an idea of what our boarding backlog was. We've taken that graph out. Can you tell me where we are on that?
Again, I don't have that information in front of me right now, but I can start to note that and report that out as we cover these key statistics. I will say that we've had a couple of code yellow days because of our throughput and people waiting for beds in the ED. So that is something that operationally we watch very carefully. But I can prepare something and bring that trending slide back.
We had it, we had it down, and I think we all got pretty comfortable that we had a handle on it, but it's crept up over the last 6 months or so. And I don't know, Steve, if you're okay with this or not, but I'd like to bring that slide back just so we can begin keeping an eye on that, because that's a key metric when it comes to our ED.
No, I agree completely. That's a good point. And I've heard anecdotally conversations from people in the community about going to the ED for various things and not getting seen for quite a while, or not getting a bed because of the COVID impact. So I think that's a good point to bring back, Trent.
All right, thanks.
Trent, I'll go back and look through some historical. I don't recall ever having that in my financial presentations, but we will look. You're actually looking for the number of ED holes. Is that right?
Yeah, and I may be mistaken. I've never been involved in the quality committee, and I know I used to see it.
Okay.
It may just be that I'm remembering it from some other committee, but whatever. I mean, it is a key statistic for us. It helps us get an idea of how we're doing.
Yeah.
Trent, that used to be part of the quality committee.
Okay.
But Trent, I will do kind of a one-time update, and then we'll make sure that statistic and report out moves to quality. And we can discuss it once we see it. If y'all would like to have that as a permanent report or a quarterly report here at Finance.
Thank you.
You bet. That is all of my prepared remarks, unless there's additional questions.
Okay. Any questions for Sharon? We're off to a good start for this fiscal year. That's a good month.
I'll take it.
Yeah. Any questions for Sharon on any of these items?
Ziegler, I do have a question.
Yes, sir.
We're doing more and more telemedicine, and but I was told that CMS is going to change, that we can't do it by phone anymore, and that we have to do it by Skype
Video.
or something. And there's so many of our patients don't have that capability. So I just wonder how that's going to affect us, because I do a lot of telemedicine. We're going to try to do it with video, but the majority of our patients aren't going to have that capability.
So I can tell you what we planned for budget, and I'll give you a little bit of history. When we entered into the pandemic, CMS did make a concession for what they would reimburse or allow us to charge Medicare. That was, from a physician standpoint, there is about a half of a payment that you get for a telehealth visit compared to a face-to-face. So there is some reimbursement that always exists. For the physician professional fee, that concession made by CMS brought them up to 100% of the payments. So those payments were supported either way. It was encouraging physicians to continue that touch with the patient, even though they could not see them face to face. And it was a temporary issue. I believe that right now we expect that to go through January. We don't know if it will be extended again. It traditionally, at least since March, has been extended in a 4 to 6 week period at a time. So we're in that for right now. From a medical center side and a facility, the payment that you receive from a clinic visit would go from your normal payment to zero. There has been concessions from CMS that allows us to charge a connectivity fee, which is at a much lower rate than what we would receive from a face-to-face during this allowance period. When we created our budget, we estimated the telehealth impact if CMS was not in this period would be about $6 million on the acclaim side and about $6 million on the medical center side, if I recall those numbers correctly. So we have budgeted. We also knew that we were going to be ramping up our capabilities with our physicians to be able to do more face-to-face. And when we first kicked off telehealth, if you recall, it was really telephonic. We just wanted to make sure that the patients had their medication and that we were supporting them in the best way we could. Then there were some tremendous efforts across the district that stood up the telehealth as we talk about it today. Although we had projected to start that, in the next 6 months, we did it very quickly in April and May. So I know from a budgetary standpoint that we have projected to do less telephonic and more video, but we do realize that the population may or may not be able to support that. So we have still budgeted some telephonic. So I think, to answer your question, I think we can work operationally through a claim and just see how many of those will work video. But if a patient has to have a telephone, we will still allow that to happen, a telephone visit. Does that answer part of your question?
my concern is it's kind of discriminatory. I mean, that there were so many of these patients, they just don't have that capability, and we're going to have to still provide service for them.
If we will still provide services telephonically.
But I just wondered should we send a letter of protest to CMS? I just don't think the rule's right for the patients that we serve. I'm requiring that you've got to have some sort of video capability, but that's just not realistic. The ones that I talked to, I just don't think it's realistic.
I don't know. I hear your concern. We all have that concern and share it, and we are, as an organization, along with some larger groups, trying to express that to CMS, and they have allowed the concession as they've extended the pandemic period. There's also a lot of education from a commercial plan that can occur, but that's about all we can do at the moment, is educate and also allow for the fact that there will be some patients that do not have the ability to use the telephone. The video.
Right. Okay.
I have a quick question, Sharon. Can you guys hear me?
Yes.
Yeah, you're coming through.
Yeah, on the payer mix chart between a claim and the hospital, the third-party commercial on the claim is about 21%. It's almost twice as much as the one from the hospital side. Do we know if we have a much healthier population, or are they referring to a different hospital?
No, what happens on the payer mix slides is it's done by gross charge.
Okay.
It's not done by reimbursement. So the medical center is going to be more weighted towards an inpatient, and a claim slide is going to be the professional fees, although they're slightly higher on an inpatient basis for consults than they might be at a face-to-face visit at a clinic. There's not that huge differentiating factor. So it's really done it's not done by number of patients, it's done by gross charge.
Yeah. All right, thanks.
You bet.
Okay, any other questions for Sharon? I would ask for a motion to accept the October 2020 financial report.
For approval.
Motion by DT. Second by
second.
Second by Zim. All in favor of the motion, please say aye.
Aye.
Opposed? The motion passes. Thank you very much, everyone. We'll move to item 6B, which is a professional services agreement. And Dr. Hochberg, you have to turn on your camera, Michael, because I want to see if you cut your hair since I last saw you.
The hair is still going strong.
All right, look at you.
Going strong.
Lead guitarist, Furrow Jam, Michael Hochberg.
But it is going strong.
Welcome to Woodstock.
Easy rider. Something for the board. So, thank you for the opportunity to come before you today. It is my pleasure to seek your approval for a contract between Acclaim and Sound for our hospital medicine program. For background purposes, Sound has been providing services here now for several years under the on-site leadership of Dr. Saba Assad, who has really been an integral member of our medical staff, as well as our throughput initiatives and a number of projects across the organization. The current contract that Sound is under was signed in 2018, and it was a fee-minus contract that began in 2018. It expires end of December, so January 1st would be the start of the new contract. We were in the process of planning for an RFP for hospital medicine services as part of our due diligence. But considering the instability in the marketplace related to COVID and wanting to ensure that we had a secure hospital medicine program going into next year and into understanding the potential labile nature of COVID, we decided to not pursue an RFP and just simply go through a auto renewal, which was allowable within the Sound contract as it currently stands. So that auto renewal is for 2 years. We still went forward with the fair market value analysis, an independent third-party fair market value analysis, to ensure that the base fees and the rates that were applied still made logical sense as well. For those, a fixed fee or a fee minus contract, which this one is.
He's cutting out. I can't.
Your audio is not working, Dr. Hottenberg.
How about now? Is it a little bit better?
Yes.
And yes. So sorry. So a fee minus contract means that there's a base fee less any collections that Sound generates. So in total, the
cutting out again.
Yeah, I can't.
Dr. Hopper, why don't you stop your video and see if it'll give it a minute to catch up?
He's going to need to go back a couple minutes.
Dr. Hottenberg, we can't hear you.
Michael.
He can't hear us apparently.
Where's that Mendenhall?
For you, and I see that I am here, and I've got bars and signals.
Okay, when you're not doing your video, we can hear you now.
All right. Well, it must be my hair. It is interfering.
It probably is
with the video. So this is a fee minus contract. A fee minus contract means that there is a base fee that is calculated based upon staffing, volume, recruitment costs, a number of factors. Then on a monthly basis, Sound remits their collections, and then we subtract that from the base fee. So in total, the contract value is $13.1 million. We estimate, based upon a fair market value, that the collections that they will generate from this contract is slightly in excess of $7 million. Now that includes fees generated for our connection patient population, as well as any insurers. So really the net expense associated to this contract is in right around $7 million, a little bit less than $7 million. As I said, this was the contract that was negotiated in 2018. Because it was an auto renewal, there was not, we just auto renewed on the fee minus. Moving forward, once we initiate an RFP associated with this, then we can certainly review other models and other subsidies associated with this. The other thing of note related to this contract, however, is we did do a team expansion. So pretty consistently, since Sound has been here, our inpatient encounter volumes have consistently grown by anywhere between 3 to 5%. They were contracted in that 2018 contract for 30 FTEs, but were historically running around 34 FTEs, and we were responsible for covering those locum costs associated with those 4 FTEs. we're memorializing into this contract a team expansion from 30 to 36, which should eliminate the added expense associated with locums, as well as enable some movement of the staff so we have additional coverage, particularly during our busiest hours during the morning time, early afternoon into early evening, so that we can maximize throughput initiatives across the organization. And so that goes again from 30 to 36. The last thing that I will mention with regards to this contract is, although this is a PSA and it is excluded from the diversity procurement policy, I do want to make mention that we consistently dialogue with our partners such as Sound, and I would be pleased to share with you some of their data around diversity inclusion for our on-site program. The physician staffing here is 55% male, 45% female. Across the region, Sound is similar ratios, 53% male, 47% female. From a distribution on race, 50% Asian, 42% white, 8% African American. Again, similar types of ratios across the region as well for Sound, but this is something that we have an ongoing dialogue with them. And so with that, I would ask the board and be happy to answer any questions for a 2-year renewal of the contract for Sound under its current and previous fee minus schedule, with the goal that towards the end of this current auto renewal period, we would be initiating an RFP.
Hey, Michael, this is Trent. I have a question for you.
Yes, sir.
Yeah, please.
I know when we wrote this contract, what, 18, right? 2018?
Yeah, this renewal.
We had written into it some performance standards that we really wanted to keep up with in terms of how they were doing. At the time, they weren't even fully staffed. It took a long time to get them fully staffed. Give me your perspective on whether or not they're meeting their performance metrics that were outlined in that contract and whether or not they need to be reviewed.
Yeah, so we do an annual review of their performance metrics, just like we do for all our PSAs and just like all our service lines within a claim. And that is a collaborative scorecard KPI program developed between the network as well as Sound. You're absolutely correct. When I started here, they had a very high turnover rate and locum usage. That was one of the measures we put into their scorecards 2 years ago. And they have substantially reduced that locum need outside of the above and beyond staffing that they currently have need of. But they are staffed at approximately 95% permanent staff here on site, which is a world's improvement from just 2 years ago when they were hovering around 70% or so. So they have made significant strides. We also track and monitor, at least on this last year's or current year's scorecard, patient satisfaction, HCAHPS, transitions of care, discharge order before noon, 30-day readmission all cause, some multimodal pain set utilization. So we have a variety of measures that we track, monitor, and assess quarterly. And then as we develop the scorecards yearly, we develop those.
Thank you, sir.
Thank you, Michael. Any other questions for Michael? Okay, I'll entertain a motion.
Recommend approval.
Motion by Dr. Weber. I hear a second.
Second, Trent.
Is that Trent? Second by Mr. Petty. All in favor of the motion, please say aye.
Aye.
Opposed?
DT, I'm opposed.
Okay, we have one no on all the others are yeses. Motion passes. We'll move on to item C, Ms. Baugh.
Can I add a note for my no vote? Because they were supposed to come back to present it. They only show up one time since 2014 to present it to KPI and question for the board. And we have a lot of questions on the very first meeting and they never came back. So I just, that was the reason for my vote.
Okay.
You lost me, DT. I don't, what do you mean? They're supposed to come back to the board to give us updates and KPI and question about restructuring and all that stuff, but they only did it one time. And there was a lot of questions for them at that time when I was asking. And I don't think our past COO, we scheduled them to come back to visit with the board.
This is Dorothy. Can you hear me now?
Yes, ma'am.
I did have a question before y'all voted.
Oh, I'm sorry.
But my volume wasn't working, and I was going to oppose this contract. I had a question on the recruitment. When they recruit and a person doesn't work out, what is the amount of time that they are required to stay, and do they replace that person without us paying again? That's one of my questions. The other one, it talks about they send us a bill, we pay. Who in our organization adjudicate that bill?
So Dorothy, I will answer both of those questions. So the first question, so JPS/Acclaim is responsible for all recruiting fees for replacement positions as well as new FTEs. As I mentioned, that was what was negotiated in the 14 contract, and then was still continued in the 18 contract. That is definitely something that we will review once we move forward with the RFP process with them. Now that you've got a mature hospital medicine program, it should not be necessary for those levels of elements there. But considering just the renewal associated with this, the recruitment fees are still part of that contract negotiation. That's number one. Number two, Acclaim/JPS has the right to audit their revenue cycle. It is built into the contract itself. We have the right to request all their books, and they have to respond within 15 days. The responsible party, the claims data aspects of this sits in outside medical service, and so that would be in a partnership with myself, Sharon, and Rory, if and when the time calls for an audit. But at any point in time, we have the right to ask for an audit of their books.
All right, I got that. But when do we audit it? Because you have something in the contract that says, based on the previous month, it would determine what you would pay the next month. So are we monitoring and auditing that every month, as we say in this contract?
Yeah, I will certainly get that information back. That is something that I would have to get that information from Sharon or Rory, or Sharon, if you're on this call, if you have that information. If there's not already a predetermined set schedule, I think that is certainly something we can review and implement.
Okay. All right. I'm sorry I didn't get a chance to vote on that, but I'm going to oppose this contract.
I'm sorry, I didn't hear you. So I would ask Leanne, make sure the record reflects that Ms. Debose and Mr. Nguyen have voted no on this item.
Okay.
So based upon that information of not knowing when the audits have happened and that information, then that is very concerning, and especially within this type of contract. that's such a large contract, and also with their numbers. I was looking at their numbers of 50% Asian, 42% white, 8% African American, and not a mention of Latino, and especially of what we're looking at within our population of JPS. I mean, I would, at this time, I would change my vote based off of that discussion.
Okay, we'll need to take the matter up again to do that. And I'm certainly open to doing that. So entertain a motion to reconsider our vote on item 2. There's a motion for that.
I recommend approval of the contract.
We already have approved it, Dr. Weber, but we've actually had a request to change a vote. Mm-hmm. So we would need a motion to reconsider that vote. We would need a motion for that if we're going to reconsider it.
I move that we reconsider the vote.
Okay, we have a second?
Okay.
We have a motion and a second. We have to vote on that motion first. I'm remembering all my Robert's Rules of order here.
Mr. Montgomery, who was second?
The second was Ms. Arizola. Is that correct, Amanda?
Mm-hmm. Yes.
Motion by Ms. Debose. Now, the question before us right now is the motion to reconsider this vote. All in favor of that motion, please say aye.
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 It's Amanda, Dorothy. Who else?
Reverend Emerson.
Reverend Emerson.
This is Trent. I will vote in favor of that also, only because I want to get the item up for discussion so we can elaborate a little bit more. I'm not necessarily saying I'm going to be against contract. I'm saying I'll be in favor of the motion to consider.
Sure. Okay. And those opposed to the motion those opposed to the motion? I guess there being none. So the motion is reconsidered. We're back onto item B. So any questions for Dr. Hochberg?
So, I mean, just to clarify then, specifically from the concern of not receiving audited information, I wasn't here when this contract first was taken over. So Michael, if you can explain on what those procedures are then, and what movement forward and how that is recorded.
And so if Sharon is on, I will ask her as well, since the claims processing of this goes.
Where the audit comes in, and we do look at reasonableness tests before we just pay the bill. But as Dr. Hochberg said, it's a cost. They bill us their cost of these 36 FTEs. They also account for what they have billed and collected. A large part of over half of what they bill and collect is from the JPS side for those uninsured patients that I described. So what we've done effectively is to guarantee them that their costs will be covered at a certain level. We know how much the staff are costing. There's recruitment fees, as Dorothy mentioned, that also flow through the contract. It's not as if I don't want people to assume that this payment is just going unchecked. If you think about a coverage agreement that we don't have any insight to, there are some coverage agreements that we just pay an hourly coverage fee for. So based on the population, based on the fact that we want to gather diagnosis and length of stay information on these uninsured patients, we do filter majority of their collections through the medical services reimbursement area. So, we do have the opportunity to go back and review those collections, but from a percent of billed versus what they collect, given, a quarter, those amounts do appear to be reasonable. If they don't, I have had conversations with them as well. So I don't know if that helps frame some of what we're talking about, but the audit would be if we have concerns, we can go back, and Sound has been an open partner for us. When we do have questions, their business people will start to communicate whatever we are asking for. So I think the conversation that I'm hearing is insinuating that we've never been provided an audit. In most of the contracts, that's pretty standard language for if they refuse to answer or provide us additional information, we do have a right to go back in and request further information. So, from my standpoint, if the board would like us to go in and do a much heavier look at their collection practices, is the collections that they're sending us, a full payment, we can certainly do that, but we have done a lot of work on the patients that Sound is reviewing.
Yeah, what I would add to that is, as Sharon mentioned, the majority of their claims data is going to be coming through for connection and self-pay, and the contract has an allowable rates of 105% on Medicare. They have to submit that claim to us that is processed by our teams, and so it is certainly verified and validated during that process. The commercial insurance would be the area of audit. The other comment that I would make is, during this entire process, and historically back in 2014, and even up and through this renewal, we have gone through fair market value validation of that subsidy, right? And so that subsidy is effectively sitting again at $13 million, and it is based upon a calculation of historical volume, payer rates, staffing, recruitment fees, all those elements associated with it. And within that $13 million, obviously sits claims data and recoupment on connection and self-pay patients paid to them by us.
Okay. I guess my concern, Sharon, is when we continue to talk about what is the cost of service for the JPS connection, I think that's just one more cost that we're not looking at. And we should have a system somehow for, just like an insurance, when you send a bill to an insurance company, they look at it to make sure they look at it to make sure they're paying for all the stuff, but also to be able to track their costs. And I don't see that. We do this average cost, and I don't believe we're ever going to be able to get down to reduce our costs until we actually see what we're paying for JPS connection. So that's one of my concerns on this one.
And Dorothy, I don't disagree at all with that, what you just now said. I think that is exactly right. Reviewing how we conclusion that there is responsibility on Sound, because the contract, when it talks about audits and trailing AR, it's in section 5.3 of the contract, and it says a claim may request additional audit. It does not say that they will. So it's one thing for us to say we should be auditing it more, and we can certainly give that directive to a claim, and Sharon and I'm perfectly fine if we want to do that. I would hate, though, to lend the conclusion that we're voting this contract down because they have failed to provide materials that their contract requires, because it simply doesn't. It's simply a may, and I want to be careful about drawing such a broad conclusion if that's not the case.
Well, Trent, all I'm saying is that when you have a business, I think you ought to look at it. When you have a contract, somebody should monitor it. That's all I'm saying. I'm not laying any blame. I'm just saying, going forward, that is something we need to make sure it happens.
That makes sense.
My concern is,
Yeah, I don't disagree with that.
When we're paying 105% of Medicare rate, there's not a lot of incentive for people to collect from Medicaid.
DT, could you speak up maybe closer to your microphone, please?
Yes, my concern is when you do 105% of Medicare, there's not a lot of incentive to collect from Medicaid. Or once we have Medicaid eligibility, later on, 3, 4, 5 months later, once we have the Medicaid, there's no way that someone will be able to reconcile that. And there's a lot of stuff within the revenue cycle that without a proper reconciliation is very, very hard.
Hi, DT, if I could speak to your concern. I think we do a good job about, remember, all of these patients are JPS patients. We're only paying professional fees for services that are occurring within our walls, either in a clinic setting or in the sound case, the main hospital. We do reconcile through medical services reimbursement. We get notification when our patients, our unfunded patients, receive some type of funding, and we update that through medical services, and those claims are immediately reprocessed. We have good relationships with our doctors that we're paying, and that is something that we do go back and recoup once a specific patient does get Medicaid or any other commercial insurance may be identified.
And that actually is one of the benefits of a fee minus type of contract, because on a monthly basis, they are submitting their collections. And so we have that dialogue with them on a monthly basis about what they're submitting. And there's pluses and minuses in there. If there is a recoup on our side, that takes into account. If there is additional information on their side, that all gets into that conversation. And so that is actually one of the benefits of a fee minus type of relationship like this, that on a monthly basis, you are actually reviewing the collections. It may not necessarily meet the standards of a quote unquote audit, but you are dialoguing and you are conversing on a monthly basis about the collections that are coming in.
No, I'm just saying in general, because when you get paid a lot more on the rate that we're paying, there's no incentive to do appeal process. There's no incentive to work on denial. So that's just a general statement. I'm not saying that they are doing any of that stuff, but since we don't have a way to measure how much of that is being done behind the scenes, it's kind of hard to measure.
DT, and we have done some good work around trying to mitigate paying for any patient that does have a source of payment, even if it's below the Medicare rate. We will not process those claims, or we will actually go back and recoup. So we can talk more offline about your concerns, but there is a mitigating control that we have put in place for that specific instance.
Actually, it's out of our hand though, because the vendor is the one doing the collection and the billing.
I can understand, DT.
Yeah, I'm having a hard time hearing you right now, DT.
I'm saying that it's out of our control, because the vendor is the one doing the billing and the collection and the appeal process, not us stuff.
I still didn't get it.
So I think DT, and that was to my point, we do check the overall, like what are they collecting from the commercially insured, and are they aggressively using their business office? Those are what we try to review trends on from charges, and over a period of time, if we see those start to go down, that's when we can have and we have had specific conversations with Sound about, okay, tell me more about what's happening in your business office.
Steve, and Sharon, I want to go on record. I'm not saying that there's anything wrong or we haven't been doing anything. I'm just saying that it is not being reported out. For us, for me who serve on the board, it's not reported out there. Serving on the board, you don't hear anything until you get a big contract like that. So I just believe that we need to have a little bit more monitoring. Well, you might be monitoring. Maybe the answer is reporting out. Okay.
Yeah, and I would just say monitoring of the demographics, the diversity levels that we're looking at would be interesting also to report. So, thank you.
Any other questions for Sharon or Michael on this?
Well, Steve, I have an observation and a question. Can you hear me?
Yes, sir.
If this contract is voted down, what is the plan for the district starting?
You cut out. Try again. If you would try again, Chuck, you cut out on me.
Okay, how about now?
I can hear you.
If indeed
now
the
I can't hear you.
contract is voted, okay, if the contract, how about now?
So I think what Chuck's question was is if the contract is voted down, what would be the operational go forward at this point?
Yes. Thank you, Sharon.
Mr. Chair, can you hear?
Either Sharon or Michael want to address that.
I'll try to address it. The contract expires December 31st. We have been working with Sound on memorializing the FTE count here and a couple of cleanup items over the last couple of months, which is why the contract is coming forward now. We had notified them in October that there would be a renewal, not October, in August, that we were going to seek a renewal, again, considering timing of COVID and stability of workforce that we were looking at. If there is no Sound contract as of December 31st, then we don't have that physician workforce. And so we would have to effectively, I don't want to use this euphemism, but I'll use it, we'd have to scramble to find that coverage, in which case I would imagine that the expense coming through a claim would be substantial because it would all have to be on locums coverage.
Well, I mean, and Daphne, let me ask you this question. If we were to, I mean, this would be terminating contract, and we can't terminate contract once we have 150 days notice. So even if we decided today to vote this down, unless we have some cause I'm not aware of, you're still talking about, quite a while before we actually make any kind of a change, right?
That's right. And it sounds like the primary concerns are about auditing and reporting out. So to the extent that there's not any concerns with the actual contract and the services themselves, then, the board could go ahead and vote to approve the contract and give the directive back to the business team to make sure that they audit and bring that information forward.
Yeah, and I think, Trent, your point is well made. I mean, there is, unless we had given Sound 150 days before this contract had expired, which again would have been in the August timeframe, telling them that we were not going to renew their contract, the contract automatically auto-renews, as it was worded in 2018. Again, the major difference on this contract is that we are increasing the FTEs. But under the original wording of the 2018 contract, we were obligated to notify them of a non-renewal back in August. Right. So technically, Sound would have the right to say, you failed to notify us, and so therefore the contract is auto-renewed.
It just wouldn't auto-renew in the terms that we are seeking now.
Auto-renew based upon whatever was in the original 30 FTEs, and it would auto-renew under that. And then, of course, we could still then turn around and give them a 150-day notice, but then we would have to identify what that backup plan would be. And again, knowing the marketplace, knowing the COVID environment that we're in, that would be a challenge, to say the least.
This is Zim. I understand the concerns of some of the board members, but I don't think it's in our best interest to hold the contract hostage for these procedural or reporting issues. That's just my input.
This is Reverend Emerson. It's interesting, but Trent I know will recall, many of the questions in this discussion took place at the beginning when Sound came on board.
They did.
Yeah. And we're here now raising the same questions and concerns. I would say if there is an approval, what Chuck is asking, that we then can we put those stipulations or renew those stipulations and then have some way of auditing to make sure that they are in compliance. Actually, it's been so long, I had really forgotten that Sound was at the hospital, because they were to bring forward performance, evidence of their performance while they were on staff at JPS.
It started out they was going to report quarterly. They reported one time and never came back. So right. I think that what I would recommend is that, yeah, we can continue the contract, but I think on the hospital side, on the staff side, the monitoring of the contract with reporting out should begin.
That sounds like a reasonable request, Dorothy. Okay. Well, I think it sounds like a lot of us are on the same page in terms of, and Daphne highlighted this as well, that we're requesting of staff. Let's go back to our original concept here of having them report regularly. I think the contract allows for us to, it's not a shall, but it's a may, to do auditing when we feel like it's necessary. If it's not necessary, we shouldn't necessarily do it. But we've got the mechanisms in place to allow us to do that kind of oversight. Now we're requesting maybe back to our quarterly updates from them, performance updates. Does that sound like, I mean, it sounds like the contract is sound. Sorry, don't mean to, pardon that pun. It's a worded contract. We just are requesting things of staff in terms of compliance and updating and reporting. Is that correct?
Yeah, that's one of the things that I see, and I think if that is done, then I'm okay. I just kind of get tired of being told this is what's going to happen, and you don't hear of it, and then it comes up for renewal, and we're right back saying the same thing. So this time I want some teeth to it. And so since I'm over a claims chair executive committee, it either comes there or it comes to the executive committee, but it has to go somewhere. And I am a person that believes a review does not mean that I'm looking for faults. It's saying we are doing a good job. We just are verifying it. That's all I'm saying.
Yep. I got you.
Okay.
Well, go ahead.
You know, from just a monitoring standpoint, I will just say from a quality and patient safety, at the very least, again, on their KPIs and their KAPIs, that is something that is monitored, discussed with sound on a quarterly basis, and I would be more than happy to either have present that KPI, certainly either at a claim executive committee, or if you feel it's appropriate, we can certainly have sound and Dr. Assad present at the quality committee of the board to discuss, how the program has grown since 14, where they are today, and certainly an ongoing review as well. But I do want to emphasize on the quality and patient safety perspective, sound is monitored. They are reviewed. I review it personally. They are part of our KPIs and is part of our KPIs as well.
Okay. Any other questions for Sharon or Michael? Well, then let's move forward on this if y'all would consider it. I'll entertain a motion for item B again.
So moved.
Second by Dr. Weber. All in favor of the motion, please say aye.
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 Opposed?
DT.
Right. DT noted as the opposition. Motion passes. Thank you, everyone. I think that was a worthwhile discussion. I appreciate that. Let's move on to item C, Ms. Baugh. You there, Bama?
I'm here. Roll Tide. Good morning, everybody. I'm here to seek your approval for a interlocal cooperation agreement, and I'm very excited about this because this is an interlocal agreement between JPS and the Fort Worth Independent School District. And it is to roll out the Teach That initiative, which is part of the $4+ million grant we received from the state. And so this is leveraging telehealth technology in the schools within Fort Worth ISD. And it includes up to 4 visits per academic year with a mental health professional. It includes a lot of initial assessments and interventions and working with the teachers and the school system. We hired MSW level social workers for this, as well as 2 child adolescent psychiatrists. And we're very excited to roll this out. We believe that the Tarrant County children currently enrolled in the Fort Worth ISD will have access to school-based crisis prevention, intervention, and stabilization. And this is phase 1. We went with the largest school district first because we figured if we started with the biggest and got everything worked out, it was downhill from there. Our second rollout will be the Arlington School District. So just keeping y'all in the loop of what's to come. But I'm asking for your approval of this interlocal agreement. There is no cost to us or to the Fort Worth ISD.
Great, thank you, Celia. This is great. This is obviously very timely considering the world we're living in right now. So thank you very much for this. Any questions for Celia?
Move approval.
We have a motion by Reverend Emerson.
Second.
Second by Ms. Debose. All in favor of the motion, please say aye.
Aye.
Opposed? Motion passes. Thank you very much. Item D.
Thank you.
Thank you, Zelia. Doug.
Yes, sir. Thank you. I'm here to ask for approval for 1, exception of bid, and 2, a customer order between CareFusion and Tarrant County Hospital District for an annual cost of a little over $42,000 a year and a 5-year annual cost of approximately $212,000. This agreement adds an additional carousel system in the pharmacy, which helps us with inventory management of all of our fluids for our IV bags, right? So this will again allow for better inventory management, allows for scanning and a way for staff to pull those IV meds to be mixed in the pharmacy. The agreement does carry a 30-day out clause with notice. So any questions on that I can answer for you?
Any questions for Doug? For the motion on this, it'll need to be a two-part motion for exception to bid and for the item itself. So I'll entertain that motion.
Move approval of the exception to the bid and for the approval of the contract.
Motion by Ms. Debose.
I'll second it.
We have a second by Dr. Weber. All in favor of the motion, please say aye.
Aye.
Opposed? Motion passes. Thank you, Mr. Chung. Appreciate it very much. We'll move to item E, and I think Wanda is going to make this presentation.
Yes, good morning, everyone.
Good morning.
I am here to present to you today a purchase agreement between Olympus American and the hospital district. This is part of our 2021 capital budget, and it is to replace our fleet of endoscopes and colonoscopes out at our outpatient surgical center in Arlington. The current scopes that we have are 7 to 10 years old, so we are asking to replace those. This is part of our Vizient contract, and it's also part of our initiative this year to grow the volumes out at Jessica and help us try to get more patients served out in that area.
Mr. Trent, move to approve, Steve.
Motion by Mr. Petty.
Second.
Second by Reverend Emerson. Any questions for Wanda before we vote? All in favor of the motion, please say aye.
Aye.
Opposed? Motion passes. Thank you, Wanda.
Thank you.
Mr. Lane, item F.
Good morning. How's everyone today?
We're good.
Hey.
Well, it's good to see you guys again. I'm here to present two contracts. The first one is for landscaping grounds maintenance between Superscapes and the district. It is went through an RFP process. We had 7 respondents, and I am very pleased that this contract exceeded our benchmark of 25% for hub business. It's at 28%. It is a 3-year contract with 2 one-year renewals, $800,000 a year, $2.4 million over 3 years, $4 million over 5 years, and it does have a 30-day out.
Okay, any questions for Adam?
Move approval.
Motion by Reverend Emerson.
Second.
Second from Ms. Debose. All in favor, please say aye.
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 Opposed? Motion passes. Thank you, everyone. Item F, Mr. Lane.
Item F is for the build out of the JPS Outpatient Behavioral Health Center.
Item G, I apologize. Item G.
Is the build out for JPS Outpatient Health Behavioral Health Center at 601 West Terrell between the Postal Group and the district. This is a $1 million contract, of which $731,000 was bid. Just for clarification, the difference between the two numbers, we did have vandalism in that facility. The vandals tried to remove the copper line piping within the building. Unfortunately, those were live lines and they flooded out the building. So we have a $300,000 contingency in this project to repair all of those items that are outside this contract, and that is an under control contingency. And we have already received adjustment from the adjuster. We have received an estimate for that amount as well. So we will be replacing some components of that, and some of those walls will actually be torn out. So this is 100% hub business. They've done business with us before, and this is the next evolution of them moving up and doing a larger project for JPS. So I'm really happy about this contract.
Great. Any questions for Adam? Entertain a motion.
Recommend approval.
Motion by Dr. Weber.
Second by Zim.
Second by Mr. Zimmerman. All in favor of the motion, please say aye.
Aye.
Aye. Opposed? Motion passes. Thank you, Adam.
Thank you all.
Mr. Dubiclet, item H.
Thank you very much. Thanks for the opportunity to present. I'd like the board to consider approval of a subsequent policy period offer between Unamerica Insurance Company, which is Optum, and our Tarrant County Hospital District. And I'd like to share with you just a few items. One, this is a stop loss coverage that provides protection for self-insured employers like us by serving as a reimbursement mechanism for catastrophic medical claims exceeding our predetermined levels. The amount of this quote is $1,461,565, which is included in the approved FY21 budget. I'd like to also just add you just a little more information regarding that quote amount. When we look at that 1.4 million, the closest competitive bid for this same coverage was $1.2 million more than the bid I'm presenting to you today.
Wow.
So it's quite a value. And our benefits consultant, McGriff, helps us secure these bids each year. And no vendor in the market will bid more than 1 year at a time. So there's no way to sort of lock them in, obviously, because they want to measure and they're always adjusting premiums to measure the risk. So let me know if you
go up.
Appreciate your consideration.
Any questions for Alex?
Hey, Alex, this is Trent. What is the level? What is the floor of the stop loss? What is the amount that we are willing to pay versus what goes to a claim here?
Right. We have a deductible of $500,000.
So is that then procedurally every claim that we have over $500,000 automatically goes against this policy?
Correct. It is a $500 deductible in total per claim. And in any claim that goes beyond that 500K, that is correct.
And roughly, what has our history of claims been over the last year?
I can tell you, I can get that information and present that to you. I will tell you that for last year, there was absolutely nothing out of the ordinary. It just sometimes depends on the number of medical claims that exceed that 500K deductible, but it was nothing out of the ordinary. But I will provide you with that, and I apologize for not having that today.
That's okay. Thank you. I appreciate it. I just like to see it because I know that we've self-insured and I know that we've got stop losses in place. What I'm not sure of is how effective we are in establishing that floor relative to our actual claims.
I will get that for you today.
Thank you, sir.
Thank you.
Thank you, Alex. Any other questions for Alex? Entertain a motion on item H.
Move approval.
Motion by Ms. Debose. Second by Reverend Emerson. All in favor of the motion, please say aye.
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 Opposed? Motion passes. Thank you, Alex.
Thank you.
Item I, Ms. Parker.
Yes, hello everyone, thank you. So I have a few contracts to present. The first one is starting out with an amendment to our interlocal agreement with the City of Fort Worth. Basically, this amendment provides current to the contract the correct address and location for the medical services and support services that we provide to our persons experiencing homelessness that are housed at Town Place. As you remember, when we started with COVID in March, we were in the convention center. The operations for that moved to Town Place, and so basically this just allows the contract to reflect the appropriate and accurate location for services, and continues to currently right now the City of Fort Worth reimburses us at cost for those services that we provide.
Okay. Any questions for Joy? Well, Joe, I get a lot of good feedback from the city folks, from officials, elected officials, and all about the relationship between the city and JPS. So I commend you and your team on that. Y'all doing good work out there. So thank you for that.
Yes, thank you. I think it's one of the key things through the crisis is we've really been able to form closer relationships and partnerships, which is a great segue. Do you need
we need to vote on this. So, we have a motion by Mr. Debose, a second by Dr. Weber. All in favor of the motion, please say aye.
Aye.
Opposed? Motion passes. Thank you, everyone. Let's go to item J. Ms. Parker.
Okay. So back to what you were saying about the City of Fort Worth and our relationship. It's a great segue in the sense that I'm really excited about this contract. The City of Fort Worth, with the Fort Worth Housing Solutions, has secured funding to purchase a renovated extended stay hotel, which has 119 units. It's Casa de Esperanza. It's located close to 820 and 35. Essentially, this is a permanent supportive housing facility, and we would partner with the City of Fort Worth in providing medical navigation and social service support, and they would reimburse us for the cost of those services to assist with medical navigation of all of the clients that would be living in the 119 units. And so we're really excited about this and the impact this will have in providing housing to those experiencing homelessness, and to ensure that we provide wraparound service support in this endeavor. And so essentially this is, again, the City of Fort Worth paying us for those services that we render.
Yeah, Joy, I first heard about this project about a year ago when they were just kind of bringing people together on it. So I'm so excited to see it move forward. Any questions for Joy on this?
Joy, one question. Does this give us the ability to establish medical home protocols for all of those people that have certainly never had that in the past?
Yes, you're exactly right. So in the conversation of what would be the support for this group, it was really to say that a lot of these individuals actually are patients of our medical home.
The new website design.
But
if you haven't had a chance, I hope you go to TFB.org and have a help around. And I believe you could point forward. It's not just
put their phones on mute, please.
People going to TFB.org.
Sorry, I'll try to speak over that. Sorry.
And I saw this translate.
Okay.
It looks like everybody's muted. I don't know where that's from.
I think it's DT.
And now, Trent, I'm so sorry. So ask your question again so I make sure I'm answering it right.
I was just making sure that with this project, we're able to really implement new protocols for medical health homes for these people.
Yeah, so essentially, yes. So it's navigation to establish relationships with the PCP. The majority of those clients, of course, will be seen through our True Worth Clinic, which services as the main medical home in support in that area for persons who previously experienced homelessness. But certainly that's part of that navigation service. And I'm excited because it's not just JPS at the table. There are other local groups, MHMR and some others, that will provide great wraparound service support for this population to be successful. And this will be this is permanent supportive housing for them. A great win.
Yeah, it is. That's cool.
Huge. Okay, any other questions for Joy? Entertain a motion on item J.
Move approval.
Motion by Ms. Debose. I believe, Trent, was that you the second? Okay, motion and a second. All in favor, please say aye.
Aye.
Opposed? Motion passes. We have to keep moving because if we get into this Debose's HR committee time, she gets mad. You do not want to cross her. So
don't start that.
Item K, Ms. Parker.
Okay, so we'll keep it on a roll. So this is another interlocal agreement between the hospital district and Tarrant County, specifically in our relationship with public health. We are essentially supporting them in acquiring additional flu vaccine. And so it's essentially reimbursement to JPS at cost of procuring that flu vaccine to support flu vaccination for those that are uninsured in the county. So it's a great win again, I think, for our patients, and of course we are reimbursed at cost for that.
Okay.
Yeah. Any questions for Joy? Entertain a motion on item K.
Zim moves for approval.
Motion by Mr. Zimmerman.
Second.
Second from Ms. Debose. All in favor, please say aye.
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 Opposed? Motion passes. Item L, and this will be a two-part motion if we consider it. Ms. Parker.
Okay. So this is, yes, considering approval of exception to bid. It's a purchase agreement between Quantel Medical and JPS. Essentially, we have some diagnostic ultrasound for our eye clinic in ophthalmology. As we went for repairs, we were informed that replacement parts were no longer available. This is a very specific piece of equipment that is sole source And so essentially, in order for us to, continue this service, this great service of diagnostic capability, we're seeking this exception to procure this piece of equipment.
All right.
Did I hear a question for Joy?
Move approval.
Motion by Ms. Debose.
Second.
Second by Dr. Weber. All in favor of the motion? Oh, it's a two-part motion to exception to bid and approval, correct, Ms. Debose?
Yes, for both parts, yes.
And I'll second for both of them.
All right, we have a motion and a second. All in favor of that motion, please say aye.
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 Opposed? Motion passes. Thank you, Joy, very much.
Thank you.
Great work. Item 7, Ms. Walker.
Yes, thank you, Mr. Chair. We had 40 contracts under $500,000 for the month of October, and that concludes my report.
Okay. Any questions for Daphne? There being none, we do have one item for closed session, as we mentioned earlier. So we'll take a 60-second break, or however long.
Steve.
Yes, sir.
Before we go into close,
yes,
I'd like to just give an update or report to Sharon and the board, because I might have to step away in a minute here.
Okay.
We last on a couple of days ago. What's today? Thursday, I guess.
Thursday.
Michelle and I met with the pastors on the connection program, and it went exceptionally well. That they themselves came up with suggestions and ideas to get the word out about JPS connections. And in that room were pastors that, if you counted up, probably over 2,000 meals had been given out. And so one of the things were to put that information in the packet, in their meal packet. So when they get a box of groceries, in that box of groceries will be a folder introducing the JPS connection and who they can reach out to get information to sign up. What was interesting was that it was really shocked me that many of the pastors really had no idea about the connection program, and feel that many of their members, there are members who are aware of JPS, but really not aware of how to become connected. They're thinking, oh, it's the county hospital, I can go get taken care of, and not realize that the connection program is there, that they could probably become a part of that. So we have another meeting coming up tomorrow morning to also develop a plan. With COVID, it is really tough right now, but a plan to bring memberships together and make presentations to groups in our faith-based environment.
Great.
Michelle was really, really outstanding,
Reverend Emerson, we're very excited to see what's going to come out of this. Michelle Haynes, who Reverend Emerson is talking about, is our director over the eligibility area, which includes the connection sign up. So we're really excited to see where this goes.
One of the things that did come out, and Michelle might have talked to you about it, Sharon, but I'll say it to Robert now. 2 or 3 of the pastors registered the same complaint, was not with the connection program, but with our call center. They had to stay on hold for over an hour, 40, 50 minutes, or they didn't know where to refer the person to, and so that was a big complaint at the meeting. I wasn't expecting that, but they did come out, and they thought Michelle could solve that problem on the spot. So
Reverend Emerson, just a reminder, our budget 21, one of the initiatives is kind of to revamp that call center and how we have incoming patients. So that's underway. It's not a quick fix, but we have identified that as a priority this year.
Okay.
Thank you for that update, Reverend Emerson. That's great. Okay, there being no other open business, Mr. Mendenhall, how much time do you need to get us into closed?
We just need about 2 minutes because we got to move quite a few people that should not be enclosed to the lobby. So give me about 2 minutes and we'll move to closed, and I'll let you know here in just a minute. Okay.
Okay.
Hey, David, as a reminder, Rory is enclosed.
He's already connected. He's ready to go.
Thank you.
David, it's Roger Fisher. I just called in.
Good to have you, Roger. We're just going into closed session.
Hey, Roger, thank you for that. Are you going to be staying, Roger, through the HR committee as well?
Well, it depends on how long Steve's going to be. Good grief.
I'm going to have to talk in closed.
All right.
Okay, we're reconvening in open session, and there being no further items before the Finance Committee, we are adjourned. Thank you, everyone, for your participation.
Thanks, Steve.
All right. Good afternoon, everyone. Let's call the Human Resource Committee meeting to order. I do believe we have a quorum. So we do not have any citizens wishing to address the committee. Our next thing will be approval of our minutes. Are there any corrections to the minutes?
That's not on the agenda that I have, Dorothy.
Okay, all right. I don't know how we forgot our minutes, but okay. So we'll skip right over that.
Well, go ahead and approve. Go ahead and approve the minutes.
Okay, all right, okay. It was in your board packet. It was on the portal.
It's item A.
Yeah, is there a approval of the minutes?
Move approval.
All right.
Second.
Okay, it's been motion by Ralph, and I didn't catch who was the second.
Zim.
Zim, okay. There being no further questions, all those approve of the minutes signify by saying aye.
Aye.
Aye. Okay. Then I think the next thing we have is B is the background and okay. Daphne said we could do the policies as a group if there were no questions. If there are questions, Daphne, can we just pull those and approve the rest of them?
Yes, so what you should do is note that these policies were sent out and posted prior to the meeting. You will go through and read which ones are up for approval, and then ask the committee, do they have any questions or want to discuss any, and then you can make a motion to approve these as a slate.
All right, thank you. Okay, we had several policies submitted for approval. 600 for contract staff, HR 800 for employee license registration or certification, HR 1000 competency test, HR 1800 standards of appearance, HR 2200 emergency event staffing, HR 2800 violence in the workplace, HR 3300 Fair Labor Standard Act, HR 3600 attendance and punctuality, HR 3900 solicitation and distribution, HR 4000 end of employment, HR 400 4100 changes, convictions or sanctions, HR 4200 awards, gift and prizes, HR 4300 personal digital device, HR 4400 employee of relatives, HR 4900 post office health evaluation, HR 5100 work related injury or illness, and 9100 tobacco free environment. Are there any questions on any of those that was submitted that you had on the portal?
Dorothy, I have one comment for Alex.
Okay.
And it's on HR 600, the contracted staff.
Okay.
Yes. Under intent and scope, the Joint Commission has gotten very proud of its name. And it likes the in where it says commission. So it should be requirements of JPS and the Joint Commission. God, I'd hate to make them angry.
Okay, we'll make that change.
That's it for me, just an observation.
Okay.
So I think I just had a quick question. As I was looking over all of these policies, they were just minor like grammatical changes. Was there anything major in the change? I didn't see anything in those.
I can answer that, Ms. Debose.
Okay.
Okay. No major changes. Most were grammatical edits, small edits, minor grammatical errors. There were sometimes where the edit was simply, it stated the district where it should say JPS, things like that. And just by way of introduction, Rihanna Pollard, who is our employment lawyer, is with us today here at the HR committee meeting. She works with Daphne Walker, and just wanted to make sure that you knew whose face you were looking at there.
Okay.
But all minor.
I don't see her.
He's probably on one of your screens.
Okay.
I can't find.
Hi, I'm Rihanna. I just wanted
There
to say
she
hello.
is.
Okay.
Yeah.
I see her.
She's been with JPS now, I think, over 8 years. So.
Right.
Alex, I only had one question on HR
Yes, ma'am.
800.
Yes, ma'am.
Information that was moved, did that go into a procedure? You know, if that was the one that had the most changes on it.
Right. So 800, I'll just pull it up one moment. And Rihanna, if you want to speak to it, feel free to jump in and speak to that. Or you just need to turn you're on. Okay.
There you go.
Yes, there were not any substantive changes with this one as well. It was simply a rewording to make it more succinct. The new policies often the goal is to shorten the policy statement, and in this case, they eliminated the intent and scope. That was the primary change.
Okay. All right. Okay. But that intent and scope is followed up in some procedure, right? I'm really just given what you're going to be establish a mechanism, right? And
there is a process.
Yes.
Okay. All right. Are there any other questions on any of the submitted policies? Okay. There being no other questions, then I will entertain a motion to approve the slate as presented with the corrections that was made on one policy.
Recommend approval.
Right.
Second.
All right. It's been a motion by Chuck, second by Ralph. All those in favor of the slate of policies signify by saying aye.
Aye.
Hey, that was easy. Thank you.
Ms. Debose, if you don't mind, what I'm going to do is I think we should put that under Daphne's annual evaluation by the fact that she just gave all of you board members 2 hours of your life back.
Right. Well, thank you. Okay, then the other item that we have is the turnover HR dashboard. Alex.
Yes, thank you, Ms. Debose. So as many of you may have this in front of you. If not, I will just go over a little bit more detail. I know in the past there have been board members who've asked for just a little bit more detail. And so I would always like to please the board. And so I want to just talk through a few items. So if you're looking at the very top quarter of the data, you will notice that we have the FY19 number listed to your left, and then we go through each quarter of FY20, and then on the far right, you have the benchmark number. So I would like to point out that when we look at first year turnover for the first quarter of FY20, this is pre-COVID. We were doing very, very well. It was at 26.35%. This is pre-COVID. You'll notice then in the second quarter, it jumps to 38.36. Well, this is definitely COVID. And you also may recall that we had a freeze on hiring during COVID. And whenever you stop new employees coming into the organization, then your turnover rate will increase. So when you then move on, third quarter, got it down a little bit. We're working to improve it. This fourth quarter, we see it bump back up again to about where it was at the end of the year. But ultimately, when you look at the benchmark of 35.67, and you look at where we ended in the fourth quarter, we obviously did not hit our benchmark. And there are a few reasons for that. And so instead of coming to the board and reporting on turnover and answering a few questions here and there, I really turned to our team in HR and I said, what are we going to how are we going to drive first year turnover down? and make the board proud and make Mr. Early proud. And what we decided on is that we were going to work together. So we put together and we took a look at this data. And for example, support services. When you look at the support services, which includes nutritional services, textile processing, patient transportation, you will notice at the bottom of the sheet there, that comes in at right around 34.32% turnover in that area. That is an area that is leading all departments. And so we take a deep dive into support services. We look at first-year turnover in nutritional services. Is it about 50%? We look at first-year turnover in textile processing. It's 166%. When you look at turnover in patient transportation, it's 85%. So these high numbers of turnover in these positions is somewhat expected across this sector. But what can we do about it? And so we know that these areas have a huge impact on the organization overall turnover number. When you look at the fourth quarter going back up to the top at that first year turnover at 38.32%, what's driving a lot of that is the support services area. And so we decided to focus our efforts on that. And we've launched, and I won't take too much more time, but we've launched a one-year pilot project to drive down first-year turnover. And we're going to start with nutritional services, which is that one that's got 50% turnover right now. And Neil Lavender's been a great partner in this as we are launching this with his team. And it's really about 4 of the teams within HR coming together: talent acquisition, employee experience, learning and development, and diversity and inclusion. And we're going to work together to create this pilot program where we're focused on not only hiring the individuals, right, but making sure that we are contacting those new employees during their first week. We're following up with them within their first 30 days. We're understanding their perspective, what their interests are, what their career aspirations are, why they came to JPS. We want to really stay in touch with these individuals. And we're going to join Neil Lavender, and he has a great program where he does a new team member luncheon. Well, now HR is going to be at the table with our engagement specialists at those lunches, talking to those employees. And the learning and development is going to come in and give them some career guidance consultation and work on supervisor leadership training. And also Neil is committing to a couple of hours a month, a few hours a month, where his employees are going to be able to get off the floor and get a little training around what their career aspirations are and getting skills, whether it's Excel training or cashiering, if they want to move to another role within nutritional services. So all of this to say that I can come and I can report these numbers to you at the HR committee meeting, but now I'm going to come and I'm going to keep you updated on how this pilot project in nutritional services is working. So over the course of a year, every quarter, we're going to check in and say, here are all the normal turnover dashboard numbers you see, but specifically, this is how our pilot project is working. And once we get this down and this pilot project is successful, which I know it will be, because we've got partnership with the leadership team there, and we're going to build this the right way and pay attention to the data, both quantitative and qualitative. But at the end of the day, we can then leverage this same tool, the same solution in other areas of support services and in other department areas where we see high turnover. So that's my report on turnover today, and I'm open to any questions that you may have.
Alex, this is Reverend Emerson.
Hi, Reverend Emerson.
One of the things I think we will find, and I have to kind of go back to my own days of being a department head for the city of Fort Worth, that many employees equate the importance of their position with the pay.
Mm-hmm.
And so you have some employees who come, if I'm in one of the lower paying positions, I'm only coming to work. That mindset to feel that I'm vested in the vision of the organization may not be there. And I think that one of the ways, I shouldn't say one of the ways, but one of the things I would ask is that maybe some kind of way, and you alluded to that, is that We can help that employee to understand whether you're mopping the floor or whether you are in charge of the one who mops the floor, you are just as important for the success of this organization. And I think that somewhere we can work on that mindset that just because you may be in an entry-level position, you are just as important as the person who leads this organization. So
that's a great point, Reverend Emerson. I'll tell you, I went on I was actually taking a short field trip with Mr. Early just a couple of weeks ago. And it's one thing I noticed from him is that that's going to be very easy for us to convey. Because when I walked the floor with Mr. Early, at all times, he spoke to everyone. I don't care if they were a physician, if they were cleaning the floors, he spoke to them in the warmest of ways, knew their names, stopped, and showed just how important they are. And so that's easy to carry through and carry forward. And so, yes, I agree with you. Excellent point. And yes, that is top of mind. That is why we're making these investments in the individuals there, because it's not just about reducing first-year turnover. It's about retaining these people who show up to work every day,
right,
who are on time, who are doing a good job. We want them here. We want them to stay here. We want them to grow with the organization. So yes, I hear you loud and clear, and thank you.
Hey, Alex, I have a question for you.
Yes, sir.
This is a great idea. I think you have the ability to pull this off probably better than most people, especially based on your experience. I would encourage you to try to do this in a way that is empirically valid as you possibly can, and then consider publishing the results, because this is a problem in every single healthcare organization, especially public healthcare organizations. And if we can actually get onto something here that we can validate with empirical evidence, that this could be a really good this could be a good publication for JPS and really show that we're moving the dial. So I salute your effort to do it, and I hope that you do it in a way that meets the professional publication standards that it probably will deserve.
Thank you, Mr. Petty, and we will strive to do that, and I think that's a great idea. And thank you.
This is Zim Zimmerman. I'm going to tag on to the Rev's comments. Are you going to do a market competitive research of the salaries of these people?
That is, Mr. Zimmerman, that is something that we always do within our total rewards compensation area. That every 2 years we are doing market analysis on compensation across the sector and here for the Texas marketplace. So yes, is it a part of this pilot project specifically? No, but is it a part of our regular monitoring of market salaries? Yes. Will we utilize that data and integrate it into the findings ultimately? Absolutely yes, and it's a very good point you make.
And one of the things that I found when I had 3,500 people working for me is some positions were above the 50% market value, others were below the 50% market value, and where we found that we had our biggest attrition was in those that were in the bottom.
Yes, that salary, low paying roles are often the most difficult individuals to retain. But I have found that over the years, salary is not always the driver for retention, but professional development, engagement, and a sense of belonging are really important factors.
I certainly agree with that. But I do know that maybe not so much now, but before we went into this pandemic, those with lower salaries do shop to see what is available out there.
You're correct.
That is correct. Yeah.
And Alex, I don't remember the last time we did for the staff. You know, we do executive, but I do not remember when it's time for us to do that survey for the rest of the staff. I don't remember the last time we did it. Okay.
Okay. I will get. I'm sorry. It is yes. Yeah. We do it every 3 years. Each department is assessed every 3 years, and I don't have handy when the nutrition when support services was done, but I can certainly get that to you,
okay,
Ms. Debose, and let you know. And I'll let you know when it's up for assessment again.
All right.
Pastor Emerson, what you weren't able to see in the rest of your board members is when Alex made his presentation, he left his seated position and he began to walk back and forth. And what I think you all as board members want to see is an energized staff. And what you got from Alex was energy behind this issue. It's a challenging issue. And Pastor, I have seen you on the pulpit. Alex was not quite there, but he was close. So I think that's what we want in these kind of issues, is somebody with that kind of passion to deal with the challenges. So Trent and Zim, I appreciate the comments. And Pastor, I appreciate yours, because that's what we have to do. You have to make people feel, as it's true, they're important to this organization. If the folks in the laundry don't do the laundry, our whole system of patient care goes by the wayside. And I love going down to laundry and let them know how important they are. And sometimes they maybe don't get that recognition. So recognition is a part of it. Fair salary is a part of it. And the need that we want you there. So I certainly appreciate Alex's enthusiasm and energy for this.
Thank you, Mr. Early.
Are there any other questions to Alex?
I think this is going to be very important, so thank you so much. I had a separate question about current staffing and how individuals are feeling. I've been seeing lots of job openings and things like that. So is there anything that we as a board can help with and helping facilitate that?
Well, thank you, Ms. Arizola. Good to speak to you again. I think this board is always most helpful in challenging us and pushing us to do the right thing and to do it the best way we can do it. And so, part of me sharing what I shared with the board today is so that you can hold us accountable for moving the needle, and you can hold us accountable for trying. And I know Mr. Early is going to hold me accountable for it. So I share it with the board because we want to make sure that we're not just reporting numbers, but these numbers have people behind them. And so we're going to invest in the people so that you can see the result in the numbers. And so continue doing what you're already doing, Ms. Arizola. You've been one who's been most helpful already related to employment matters. And I feel very comfortable reaching out to you if I have questions regarding how we can do things better or additional support we may need. And I appreciate your offering that.
Okay, any other questions to have Alex? Great report, Alex. I think that's good. I'm glad the direction that you're looking for, and agree with Trent that if we could do that where you could write it up, it would be awesome. And I know you can, so I know that will happen, okay?
Thank you, Mr. Bowles.
Okay. Next on our agenda is diversity update. Mr. Horn.
Yes, if I could just take a moment to introduce Charles Horn, as Mr. Early has already introduced him to the board on one occasion. But as you may all recall, that he is our new Vice President of Diversity and Inclusion, and he's here today to give you an update, an overview of what his team is working on within the supplier diversity space, which we know is very important to this board and very important to Mr. Early. Charles?
All right, thank you, Alex. Thank you, board, for the opportunity. It's hard to believe it's been 9 weeks already, but it's been 9 weeks part of JPS, and it's been an amazing experience. And I have to say, when I first read in my packet that I will be tossing turkeys, I was kind of wondering what kind of organization am I joining that's tossing turkeys? And so nonetheless, I've been out there this past week, and it's been an amazing experience. And I haven't seen so many employees excited about giving and receiving. So I just want to preface it by saying it's been a tremendous experience being here thus far. But I thank you for the opportunity to share a little bit over the 9 weeks some of the work that we're doing, and just kind of give an overview. We are going to get granular as we move forward in future reports, specifically in this area and other areas. But I just want to give them an overarching sense of what we're doing and what we're focusing on. So if you move to the next slide. Over this past 9 weeks, I realized that our department, this office, has some great opportunities to align with the organization and support all of our stakeholders at JPS. And I have to say that I have to commend Marietta as our director before I got here and during the time she's been wearing a lot of different hats. And so I have to commend her work. She hasn't complained one time. And just doing from anywhere from education to training to trying to get out and do supplier diversity and outreach. So she has done a tremendous job in that space. And but in light of all the work, we as I mentioned, a great opportunity to support the organization. So with support of Alex, we have expanded our office to provide that support. And we have finally our executive assistant, which will be starting on December 7th, Joanne Jasper. And so she'll be an integral part of our team. And on her desire, she does have D&I, diversity inclusion background. So that's going to add tremendous value to the shaping of the office. We have William Johnson, who is actually started on October 26th. And he has over 25 years of experience in this space in developing, implementing, and growing supplier diversity programs. So we really look forward to what he brings to the table and his history. He's worked with the DFW International Airport, the city of Fort Worth, and just recently, the Fort Worth Transportation Authority. So he comes in with a lot of good insight, tremendous connections in the community. So we're really excited about what he's bringing. He's already hit the ground running. And so I'm really encouraged in the value that he's bringing this far. So it's going to be great. We just recently approved with the diversity inclusion manager, and this person should be starting filling that role early December. And the key to this one, among other roles that this person will be handling, is around benchmarking, the analytics, developing sound KPIs, dashboards. So we want to make sure that we're tied in and linked into the organization, and we show the evidence of the value of moving the needle. There's sometimes D&I, diversity inclusion, is seen as a feel-good, warm and fuzzy, but we want to really reflect moving the needle, impacting from employee engagement, patient engagement, retention, and recruiting. So we want to touch in a lot of those different areas. So we're creating a team that is very excited, very passionate about what they're doing. So I look forward to reporting out in the next several months. Next slide. Now here, and let me preface it by saying this, and although we're focusing on supplier diversity today, the overarching of DE and diversity inclusion is that we're creating a framework, groundwork to touch on about 8 different goals, and that will help align or touch points around recruiting, retention, patient experience, increasing or improving our cultural competency proficiency, community engagement, health equity, benchmarking for excellence. So we're creating a very comprehensive approach or roadmap and aligning to the great work that we're doing at JPS. But we want to make sure we have those measurables there, but we want to make sure that we're touching and supporting our colleagues in those spaces and bringing our DE&I, when I say DE&I, diversity, equity, and inclusion lens into everything we do, where we become organic and we're at the table and sharing and supporting. So it's already happening. And I'm very excited over the past 9 weeks. We're already been in part of conversations that we previously have not been a part of. So, and we've been well received. And so I'm very encouraged about what's been happening within the 9 weeks. And again, we should have further reporting out over January, February, March of some of the specific strategic plans around DE&I or diversity inclusion. But specific to supply diversity today, I just want to give have an overview of what we're working on based on the conversations that I've had with many of our leaders, with our community as well, and what we're going to be targeting over the next, in short term, over the next 2 or 3 months. First, we're going to reestablish our Supplier Diversity Advisory Committee. I think that's going to be critical as an oversight of our program and make sure we're in alignment. We're talking, we have the right people around the table from legal and others that we're making the changes and advancing in the right way, and that we're best in class. So this group will actually be starting in December. And so we'll have our first meeting then. We tried to schedule in November, but other dynamics were happening. So we're going to kick that off in December. In conjunction with that, we're going to conduct a situational SWOT analysis. It's going to be important that we understand our strengths, weaknesses, opportunities, and threats. We need to have that because that's going to shape our roadmap. So that will be forthcoming most likely in December. We'll get a better sense when we meet as a group, and then we'll report out in January, at the very latest February, of what that has begun to materialize. This particular group will also oversee and look at our policies, our guidelines. There's some great opportunities there. Much of what we've done historically there's opportunities to improve and around developing sound guidelines, reviewing our current policies. So we're going to be evaluating best practices in that space. So all this is going to be forthcoming December and January. One of the things I really heard from many of the leaders that I've spoken to is around our RFP outreach practices. So this group will be focusing on that, what we're currently doing and what the opportunities we'll have and what are the challenges in that space. And secondly, we're looking at the RFP evaluations and scoring criteria. That's a great opportunity for us, and we actually have already created a subcommittee or working group that's meeting in December to review that particular area. So we will have information for the board at that time in January in our progress. Performance measurements, the group will look at matrix, and we'll touch on that benchmarking. We're working with Parkland, working in the sense of benchmarking and what are they doing in their best practices there. We have a good colleague over there that's been very insightful, so we're collaborating with him and others. Our good faith form, exemption status, we have a working team that's going to be on that in December. So the two critical pieces, the scoring criteria and the good faith form, we have a working team on that in December, and we'll have some information report out in January. The B2G data analytics tool, it's a tool that we have that is a tremendous asset for JPS, but we have some opportunities to maximize it. There's some strong components to that we have not leveraged. And so we have, matter of fact, today we're meeting with contracts, construction, AP, and supply chain and others with B2G IT individual to talk about interfacing, because we need to do a very good job of tracking and reporting our tier 1, tier 2 spending. This tool also provides a higher level of accountability for our prime 1 vendors to update their information, to report out how much they're spending and what they're spending toward their tier 2. There's an outreach component. There's a communication tool. So there's a great opportunity to really improve that and make that more robust. And again, we'll have more information in January. And the last one is our training and education practices for vendors and our contract owners. There's some great opportunities to improve that. So here, I just want to highlight a few of the areas that we are working on very intentionally, very aggressively, hearing from our stakeholders, hearing from the community as well, what we're going to target in December and January to make sure we're best in class.
Call Danny Brooks. Just got a call from this number.
And so as of, sorry, go ahead.
Ralph, mute. Okay, go ahead,
Okay.
sir.
Yeah, so that is just, again, just a highlight of what we're doing in the past 9 weeks and what our target is. So I really look forward to reporting out to this board in January, February of our findings and the successes and yet what's come short-term, long-term. So that is my report for today.
All right. Well, thank you. Anyone have any questions of Charles?
Dorothy, I don't have any question for Charles, but this is for Charles as well as Alex. maybe after the first of the year, you could bring your folks to a board meeting so that we could say hi and say thank you for joining the organization.
Absolutely.
Understood.
Forward to that.
Of course.
All righty.
Mr. Chair.
Dorothy, just a couple of things I want to bring up to Charles. One is the scoring form that they use on contracts. It would be helpful if that applied to everybody, not just to particular groups or particular contracts. Or I would hope that we would do that across the board. The other thing is somewhat what Chuck talked about. Those bullets that you just mentioned that your office is seeking to undertake, it would be helpful, and I'm sure Amanda would agree with me, would be helpful if we could bring to the table both minority chambers and carry them through that process, how they could get involved, how to get them certified. Because a lot of those areas, many of the persons in the chamber are not aware, or they're not even in the chamber. So I think that would be really helpful if we could do that.
Yeah. Yes, actually, thank you, Reverend Emerson. You took one of my questions and my comments. So, Charles, very nice to meet you. Welcome to JPS. We're really excited about that. But I would definitely echo Reverend Emerson's sentiments there. And it is one of the things that I did hear some good feedback on previously of the work with JPS and at least the Fort Worth Hispanic Chamber of Commerce. So we do want to make sure that they are represented as well in understanding the process.
I appreciate that. Matter of fact, I have a meeting with the Hispanic Chamber on Monday. And so we're going to have some conversation there. And as far as the scoring, that's something that we want to level set throughout our organization. So that will be part of our conversation in our work group in December. And so we take to heart your recommendation. So we are already acting on that.
Yeah. Just one other item. Charles, I think you're going to be a fantastic asset to the city and to JPS, because I think that you could carry to the chambers some areas that they are void of really training their members on how to do a lot of stuff. They're not aware, really, many of them, how to connect with city government, the health care network, and I think that what you bring to the table could be a plus for them.
Thank you. Yeah, the conversation that Alex and I have, we're being very intentional to have, and Dr. Duncan, a very strong community engagement piece. We want to understand first, as you said, Reverend Emerson, what are their questions and what their concerns are, so we better shape our approach, and that we're really meeting what the needs are and better shape what we're trying to do. Yeah. So we have great mutual success. So we're very intentional. Thank you.
Yeah. Any other questions? Thank you, Charles, and it was nice meeting you, and welcome, and glad to have you at JPS. I'm excited about what you are doing with diversity and inclusion. Looking forward to getting some follow-up reports from you. Okay.
Yeah. Thank you.
Okay, gang. That we do not have any. We don't have anything for executive session for closed session. So what I will tell you is I did not bring the annual and the long-term incentive information. They did not have the final results. So I have called a special meeting for us to cover that and for us to approve what we're going to do. And that would still tie in with us doing what we normally do in December. But had to call a special meeting to get that. And that will be the only thing on that agenda so far. Okay? Anybody have questions of me?
I have a question, not on that, but I do have a question.
Okay. You can ask.
Now, I was wondering based on what has taken place in the last 9 months, with the issues of the Black Lives Matter, the institutional racism, having courageous conversations, I would hope that we could at some point do something, Alex and Charles, something in that area with our board to really just kind of talk. It's just, if nothing else but conversation, but I think we need to do that. And so I just want to just bring that up to see if that's possible.
Well, Reverend Emerson, this is, Mr. Early has spoken with me multiple times about, what has happened this past year and the sensitivity that he has shown and the organization has shown to the employees and hopefully the broader community by responding to this, through having those guided discussions and discussions around these very important issues internally with our employees, in groups, in utilizing the online tools, Zoom and Teams, et cetera. And so certainly if this is something the board requests, I'm sure that we can assist in developing a safe space conversation format where people can share, much like the leaders and other employees have done here at JPS. And I think the feedback has been very positive about what Mr. Early implemented here. There were some organizations across this country who did not respond in the way that JPS responded. They sat quiet and they let the events unfold, and they didn't interact, and they didn't hold discussions with leaders and employees. We did. And that's thanks to Mr. Early's leadership. And so for sure, I think we can attempt to create a similar model for discussion and dialogue for the board at your request.
All right.
Well, Dorothy, just for Ralph, just a second.
Yeah.
That has been very high on my list as board chair, Ralph, to discuss. The other part of that is Roger Fisher has made comments, and I tend to agree with him, is when it comes to these types of dialogue, I'd much rather be doing it face to face and not virtual. So if we're going to be virtual for next May or June, whatever, then we'll have to make the discussions as a virtual issue. A virtual conference. But other than that, I'd really like to be in the same room so I can be near and really see the people that are talking. That's just my impression and my outlook.
Chuck, I would wholeheartedly agree with that. I think the most effective way is face-to-face.
Yeah, I agree.
Okay. I'm all for that. As we talk about later on, as the numbers go down, I'm quite sure we can do that. Okay?
You bet. Thank you.
All right. Is there any other questions or discussions anybody have? Okay. There being no further business, I'll entertain a motion for adjournment.
So moved.
All right.
Second.
Okay, then we are adjourned. And thanks, everybody.